Hey guys, hope you're having a great day. In today's video, I'm going to be going over support and resistance. This is actually part one of 3 parts. I will then show you how to do a top-down analysis, which means you go from a higher time frame. Well, without any further ado, let's get into the charts. Hey guys, so we're on the charts now, and I'm going to break down what top-down analysis is and how you can do it on any chart. So let's get right into it. So right now, I'm on a daily time frame. So the first thing you want to do when you do a top-down analysis is you want to start on the highest time frame. For me, I started a daily time frame. I don't start with the weekly time frame. You can if you'd like, but for me, I start with a daily time frame. So I'm going to show you how I like to do it. So I'm going to start with a daily time frame. Right now, we are looking at SPY. Support and resistance are actual areas. They are not an exact price. So a lot of people who are new to trading the markets think that support and resistance are an exact price, when in reality they are not. They are an area. So for example, on this daily time frame, if I put the resistance line here, I am not saying that exactly at this point is resistance. I'm saying at around this area, it has been shown previously that it has been used as a strong resistance level, a strong resistance area. Okay, it's not an exact price. So first understand that. Now, how you want to map out these support and resistance levels is you want to look at areas where the market has rejected multiple times. So for example, I'm on the daily time frame, right? I can see that at this area right here, the market came down, pushed back up, came back down, pushed back up. It's rejected twice here, rejected once here, again here, rejected here. Here it pushed up, got rejected, pushed up, rejection, pushed up. Okay, came back down, broke below it, and it rejected the same area, used it as resistance. Boom, boom. Now what I want to tell you is every resistance level is a support level, and every support level is a resistance level. So for example, in this case, it was used as a support level here, and eventually when the market broke below the support level, it used it as a resistance level. It pushed up. As you can see, it pushed up and got rejected from this level. Now let's map out some more area. Right here, I would put another resistance level because the market pushed up and completely sold off from this area. It then used that same area as support twice, broke below it and used that area as resistance again, pushed back up and used it as resistance once more, and even right here it used it as resistance. So therefore that is a strong area. We should be watching that area. Of course, we want to map out this area as well as a strong resistance level, and we want to make our way throughout the chart so we can map out new levels and new areas. Over here, I would say that this area is an area where the market has constantly gotten rejected. So for example, this area is not an exact price, right? We're not putting exactly below here or exactly above here, but instead we're looking at this area and understanding that the market has rejected this area multiple times, whether there were buyers here that pushed the price back up or there were sellers and made the price completely plummet. That would be another area that I would put as a support, or if it used as a resistance like here or here, resistance level. So this is another strong support and resistance level. I'll move down the chart and I'll show you that I would put one here and I would put one around this area. So as you can see, they are areas. They are not exact prices. If I wanted to map it out, it would more be like, if I wanted to map it out more clearly, this is what the support or resistance levels would be looking like, right? They would be looking like areas. And we have to understand, and what we understand by those areas is at that area, there are either many sellers or many buyers. The market is either going to reject and reverse, or the market is going to break through it and most likely retest it. So these are strong areas you need to be watching out for. So for example, we have SPY. It broke above this strong resistance level that we previously mapped out. Now, we're looking at SPY over here and we're saying, okay, well, possibly SPY can come down and get rejected by this area and push back up because this area is very strong. It's been used as support before. It's been used as resistance before. So therefore, we are understanding that this is a very strong area. Now, with top-down analysis, you do move down. So I'm going to move down to a lower time frame. I'll look at the 4-hour time frame. And what a lot of traders like to do is they like to color code. So for the daily time frame, they might choose yellow. So they understand that when the market is getting close to a yellow line, that is a very strong support resistance level, and the market may be reversing around that area. Now, for example, if the line's blue, it could be not as strong as a support resistance level because it's on a smaller time frame. So remember, if you're on a smaller time frame, the support and resistance areas are not as strong as higher time frames. So what I'm going to do is I'm going to make the daily time frame yellow just so we can see the clear picture. Now I'm going to look around at the 4-hour time frame and see if there's any other areas where I see that the market has been rejected. So if I'm looking at the 4-hour time frame, I can understand that, okay, here is a good area. So this would be a good area. I'm going to put this as teal because the market came up to this area many times and got rejected, as you can tell. It also used it as a support. So therefore, understand that that area, as well as this area, the market has rejected many times. So I'm looking around, I say, okay, now let me move down to a smaller time frame. And I'm just doing it right here. But what you want to do is you want to go back in time and really plot out the areas, okay? Further back you go, the less important those support and resistance levels are. But what I'm going to do is I'm just going to show you on these smaller time frames when I do a top-down analysis what I end up getting. So here I'm on a 1-hour time frame. I'm looking around. Okay, this area right here is somewhere that I would put a support resistance level. Why do I put it in this area? I'm going to make these purple. I put it in this area because look, the market has rejected this area a couple times, use it as resistance, use it as resistance again, use it as a support a few times, and probably, which it did, use it as support later on. If we look later on, it's used it as resistance, use it as support, use it as support. So that is a strong area. Hey guys, so here's a quick reminder to go subscribe to my channel down below. Also, if you have any questions, make sure to put them in the comment section down below and I'll get back to all of them. Let's get back to the charts. This area actually could be pretty strong too, around here. As we can see, the market pushed up, rejected this area, rejected it again. It's been rejecting this area many times. You know, when you have a huge sell-off, a lot of selling off of an area, that shows strength, right? So right here, again, it came back up, retested this exact area, and had a big sell-off showing there was a lot of sellers there, and there were a lot of traders at that area. So I'll keep that as a support resistance level as well. Now I'll move down to a 15-minute time frame. I'm going to show you what I would be looking at when I look at a time frame like this. So I say, okay, let's pretend we're trading and here's the market and the market's pushing up. And we're like, okay, well, this is a strong 4-hour resistance or support level. So the market may test it, may reverse from it or bounce off of it, right? As we can tell here, the market actually retested it. It broke above it, retested it, and continued. But now we understand that, okay, the market pushed up here and pushed up here. Well, I'm going to plot this as a resistance level on a smaller time frame, which would be the 15-minute time frame, because potentially the market may not go too far above this area and may reverse back down. As you can see, the market went above it and retested the area and broke above. Now it went to another very strong area. Now this is a daily time frame support or resistance level. Now what I would do on the 15-minute time frame is I would say, okay, I'm going to put one support level here because the market tested it, broke above it, tested it, broke above, tested it twice, tested it a third. It kept testing this same area, so I'm going to use that as a support level. Now also I'm going to be putting a resistance level up here because the market has tested this area many times as well. Let's see what the market does. The market bounces off that area. It does again over here. It bounced off that resistance level again up there. It broke above. Now look, let's see if it retests it. And it retests the same exact area and continues up. Retested it again. Now, as you can tell, these areas are constant areas that the market is attracted to. They're like magnetic areas. When the market pushes past them, it seems that the market comes back to retest them. Now, depending on how you trade, you can keep moving down to smaller time frames like the 5-minute time frame or the 1-minute time frame. But remember, the smaller the time frame, the less strong that area is. Now let's move away from the charts and end this video. Hey guys, I know that was a lot of information and I hope you guys took a lot of notes throughout that video. Now remember, this is part 1 of 3 parts. I will be making videos every week. Next week, I will be releasing support and resistance part 2. Well, I will show you how to use support and resistance when trading continuation patterns. Now, if that sounds like something you'd be interested in, make sure to subscribe to my channel down below and stick around for the next video.